Hey, welcome back, everybody. I hope you're having a wonderful year so far. I wanted to go over a stock with you guys that, frankly, is in a dying industry. Um, I can guarantee at least one or two of the people who watch my videos out of the 20 are going to agree that cable telecom companies are kind of becoming a thing of the past. Think of your dish networks, your Comcast, your cable companies, your local cable. People are switching in droves from cable to streaming services like Netflix, Hulu, HBO, etc. But there is demand for the commercial aspect of those type of company, telecom companies, essentially. So I wanted to look at the Dish Network stock and just look how disgusting it was. But a company called Echostar, ticker symbol SATS, actually merged with the Dish Network, saving the company essentially. They do have quite a bit of debt coming due, I believe 2025. Dish Network has no way to pay it. Echostar, I don't want to say bailed them out, but Echostar absorbed them, and now Echostar is going to be responsible for paying that note. One thing to note is the CEO, I believe, of Echostar did create Dish and Echostar. So I don't know if this is a pride thing, but Dish did not look so good. Now let's take a look at ticker symbol SATS, Echostar, and see what this company has going for them in terms of not only the chart, their financial metrics, but also their guidance and what we can expect from SATS and how they are going to add value to their Dish merger. So without further ado, let's jump on in. And don't forget to hit the like button, dislike button, leave a comment, and think about subscribing. All right, so here is one of the most recent articles. This was actually from early December, which is almost about a month ago. Dish jumps after FCC clears Echostar deal reuniting Ergen's empire. Ergen is the one who created both of them, I believe. Let me just kind of skim through this. Dish will move under the control of Echostar, which runs a satellite network. Charlie Ergen, who co-founded and chairs both companies, announced plans for the transaction in August of 2024. So Dish has struggled to transition from a legacy pay TV business into a wireless comm company, saddling itself with 24.6 billion in short-term and long-term debt in the process, and effectively cutting itself off from the credit market. Let me see where I can find. Okay, Echostar, which provides satellite comms through Hughes Network Systems and Echostar Satellite Services businesses, had 1.1 billion in cash and 1.6 billion debt as of September. Sounds pretty ugly, doesn't it? The merger eases pressure on Dish's debts and is essentially essential to its near-term funding. Closing the deal will remove the biggest hurdle to Dish being funded through 2024, noting that $2 billion of debt will mature December 2025. Dish has almost 2 years to figure things out. It's crazy. So why would Charlie absorb his old company? Well, I would hope because he has bigger plans. I'm guessing Charlie is a guy to bring Dish back to life. I don't really know. This is the chart of SATS. It looks like the stock IPO'd back in 2007 at $21, got as high as 25, and now today the stock is at 1657. Before we even look deeper into the company, I just want to go to its balance sheet really quick. Total assets is 6.1 billion. Total liabilities is 2.6 billion. Not bad. That is about a 2-to-1 assets dwarfing liabilities. So I feel comfortable with that. Total debt is 1.4 billion. Total cash is 704 million. So it sounds like they might be able to pull something out. Let's take a look at Echostar's company and just see what's going on here. And I also want to see what they're guiding. Okay, so we'll look at the SATS or Echostar's website really quick. Okay, looks like satellite, Hughes network. Pretty generic, honestly. Yeah, nothing too crazy there. They make 1.8 billion in sales with income of 92 million. So they are profitable, barely, but that's a good thing. This is awesome to see. Their sales are continuing to go up, and their EPS is actually came out of the depths and heading in a positive trajectory up and to the right, which is what we want to see. Institutions own 38.64% of the company, but actually let's see if that is higher. So 38% was the old data. Now it's 41%, right? Oops, right there. So about a 3% change, and you can see the downhill trajectory here. It's leveled off right about there. So not bad, honestly. And a huge volume candle here. This is on the Dish merger news. So really quickly, let's run my calculations on this stock and see what the price target could be for this company. So I take the market cap if it's over $1 billion, and we're going to add 92,790,000. 92 million plus 1,810,000,000 in sales. And we're gonna go to the balance sheet. Cash is 704 million, good for them. So plus 704 million. Oh, sorry, 704, 540,000. Total debt was 1,496,780 right there. All right, and we're going to take this and divide it by the shares available, which is 33,780,000. So a fair share price of $74. This is trading at $16.57. The highest analyst price target was $65, so not too bad. Looking at their sales right here and their EPS going the right direction, I think this is a company we're going to want to watch out for. The shares outstanding, this is also going to play a huge factor. 2022, there was 82 million shares outstanding. Now there's only 35 million. That was cut in half. That is bonkers. That's crazy. We're going to open up Thinkorswim for a little bit more of a detailed technical analysis on SATS. So this is probably messy to a lot of you guys. I just want to look at the yearly momentum on this. Okay, so it looks like we have potentially hit a bottom. So we have our bottom being put in on this year, which is 2022. 2023 looks like a spinning top, but it also looks like another potential bottom and then now a possible reversal. The only reason I say that is because this potential trend is likely to kind of make a U shape and head upwards. And a possible break of this long-term channel. We can see within this channel that I keep highlighting, the stock has bounced in and out, acting as support and resistance, making both the top and the bottom support and resistance, just basically carving out this channel. So this is not something I would want to make a move on at the moment. But I want to read about this Echostar. a lot. It looks like a lot of different Hughes, Jupiter. So Hughes is making a headway for them, but what are they going to do with Dish, honestly? Like, what can Dish do to add value? I don't know if they have announced that. So this article came out December 7th. I don't see I don't see how Dish is going to add value to Echostar. If you are trading in SATS, what are your thoughts on this? It just seems like it's going to be a liability, honestly, um, to Echostar. And if we look at Dish right now, let's just take a look at Dish. It's a $5 stock, and it was trading, gosh, at like $80. Oof, ugly. Let's just go down and look at their balance sheet really quick. Total assets 52 billion, total liabilities 34 billion, I'm sorry. Oh, just narrowly escaping. Like, their assets don't even dwarf liabilities. So this is very dangerous. Total debt is 21 billion. I mean, we just read in the article that was like 24. It would take them quite a long time to pay that off. Their quick ratio is 0.44, meaning if they had to close business tomorrow, they would not be able to satisfy their debts. And we can see here also Dish is heavily shorted. So just let me know your thoughts if you're a long-term investor in SATS. I don't know if I see the value of merging the two companies. We're gonna have to see. Let's go back to SATS really quick. So one area we're gonna want to watch out for is, let's just chart this out really quick. Draw. All right. It even goes as low as right there. So we're gonna actually see a breakout January of this year. What I think is gonna happen is the stock is actually gonna come and touch. Whoops. The stock will touch $22.73. There's just so much buying power right in this last month, which was December 2023. I think it touches $22.33. Then it tries to figure out what's going to happen next. Going down here. That's just my opinion only. Going all the way back, lowest form of support would be right about there. So I think, again, over the next 2 years, because the Dish merger is going to be August of 2024. I don't know what Dish can do to really, I mean, they're not improving, honestly. They're getting bailed out, essentially, in my opinion. But again, I'm just looking at this from a high level. So if you know more about Dish or about SATS, please let me know. Please educate me, because I'm only looking at the charts and the finances. So high conviction, this stock hits $10.40, probably 2025 SATS. So unless we have a clear big reversal, we could see some bounce here. Here's our apex, and maybe. It just depends on what SATS is going to do in the short and midterm and long term. Like, yeah. So that's my opinion on SATS. Let me know what you guys think. I will not be buying, but if you're in this, I think we will see $22 be hit, and yeah, just due to a large amount of buying, and then we'll probably see a pullback. So again, this company is trending in the right direction. Like, look at this. Like this, I can't argue with this, and I can't argue with this. Like this is up and to the right. This is also up and to the right. This is right here is declining significantly, which is good. It shows that there is demand for the shares, the stock. So you guys let me know. If we're looking at the strength line is at 45. The MACD kind of looks like it's ready to flip upward. Not really too strong. Money flow looks like it's about to move up. And relative momentum is actually looks like it's heading downward. So again, I think we'll see a spike maybe to 21, 22, and then maybe just some consolidation around these levels in here. So with that, if you guys made it this far, please consider hitting the like, dislike, comment, or subscribe. I hope you're doing well, and cheers to a wonderful 2024. Thank you. Bye.